A new Angels investment decision. Hello and thank you for joining our presentation today where we'll discuss a new angel investor's evaluation of a potential startup investment. Our presentation team consists of Shabazz Ahmad, Michael Blaustein, Walter Cunningham, Mark Garrity, and Sharon Partee. Our presentation is wrapped around a new startup investment opportunity for an angel investor named Ann. Ann is a business school professor, small medical device business owner, and a newly accredited angel investor. She is also a new member of the Keiretsu Forum. Ann has been presented an opportunity to invest in a new medical device startup, ZSX Medical, which is launching a new product called ZipStitch. ZipStitch is a revolutionary new surgical closure device. The question we present, naturally, is should Ann invest or pass? To begin, we'll look at what is an angel investor. We'll move on to how to compare an angel investor to venture capitalists. We'll look at the Keiretsu Forum, and then we'll get into the actual opportunity presented to Ann. So what is an angel investor? Well, an angel investor is an accredited investor who meets minimum net worth criteria set by the SEC, Securities and Exchange Commission. They invest capital in privately held companies. Their ranges of investment range from $5,000 to $500,000, and they typically invest in early financing rounds, the seed and Series A rounds. Angels are active investors, investing both time and money in their companies. Angels are not startups' first funding source, however. This is typically by the founders, friends and families, and grants. Angels, you'll find, typically bet on the jockey, not the horse, so to speak, whereas they're betting on the founder and the founder's team, not necessarily so much as all the logistics involved. While that may be important, they really hone in on, over and over again, they hone in on the founder's abilities. So just to talk a little more about some of the main differences between angel investment and venture capital. Angel financing really is a bridge between the founders, startup teams, friends, families, own monies to get their idea up and running, all the way to the other side of the spectrum of the venture capitalists putting in the big dollars to push the growth forward of an existing company. Angel financing is that bridge, that gap. Therefore, there are some differences. Two of the main ones we want to talk about is the years to exit, as well as the return on investment targets. Years to investment time horizon before exit, 5 to 7 years is what angel financiers realistically shoot for, whereas venture capitalists is less than that, looking at 3 to 5 years time to exit and recoup their monies. The ROIs, or return on investment targets, are also less with that of the angel investors. They're looking for 2 to 3 times original investment, whereas venture capitalists are looking at 5 times plus. Now, we all know everybody's looking for the most return possible. However, for an angel investor to consider investing in a startup, it only needs to be proven about a 2 to 3 time original, whereas venture capitalists won't even consider it under 5 times. New angel investor background. Ann, our new angel investor, is a member of the investment group, the Keiretsu Forum. Ann is an experienced investor with 3 investments to date. Ann also owns a successful small business in the medical equipment industry. She is looking to invest in at least 10 startups. Some of the most important investment criteria for Ann are location. She wants the opportunity to interact with the company and therefore wants the regional convenience. The capital raise record and ongoing potential. How much has the startup already raised? The financial position. Is it favorable for the stage the company is in? The management team and the founder must be very adept in the industry they are entering. And also the exit strategy. How long will it take to exit and recoup her funds? The Keiretsu Forum is a global angel investor network with over 2,500 members located on 3 continents. In 2014, members invested $45.3 million into 79 ventures. This is an average of $573,114 per investment. These investments range from $250,000 to $2 million. While members make individual investment decisions, They collaborate on the due diligence process of the Keiretsu Forum as well as the network. Keiretsu is recognized for its thorough and comprehensive due diligence process. This due diligence process and cultivation process benefits the angel investors as well as the entrepreneurs and their potential startup companies. The opportunity, ZXS Medical Supply and ZipStitch. ZXS Medical Supply Company satisfies 4 important criteria to Ann. For one, they have a very strong management team. Their founders are experienced and know the market, the competition, and the technology. They also have access to a powerful network of surgeons and healthcare providers. In addition, they have already raised $660,000 of the $1.5 million they are ultimately seeking. ZXS has an exit strategy of acquisition in 3 years versus a IPO, initial public offering, of 5 to 7 years. This is a real positive to Ann. Their financial outlook has projected revenue to increase 660% over the course of 10 years, from $260,000 in 2008 to $1,720,000 in 2018. Lastly, their headquarters is about an hour away from Ann's home. This is nice because Ann can be involved in the operations and decisions, as well as mentor and contribute to the decisions in the company. However, the company does face one critical challenge and risk. Their product has not met FDA approval yet and is in the process. However, the approval process does seem very straightforward and achievable within 11 months. And the founder also has experience in this FDA process and feels confident about gaining that approval. The deal. After identifying the positive criterion for Ann's evaluation process, she looks a little deeper into the deal and realizes that ZXS has a pre-money valuation of $7.5 million US, which is supported by projected financials. In addition, these terms are overall favorable for investors. They would be participating in preferred stock advantage at liquidity event, 8% dividend priority to investors for distributions. They'd be protected against dilution if a down round occurred by receiving additional preferred shares at a lower price, and they also have 20% warrant coverage. Parsing the question, Ann asked herself, is this opportunity too good to pass up, or am I putting myself at risk? We boiled this down to 3 succinct questions. Is ZXS Medical a good opportunity? Is it too good to pass up? Or is Ann just simply putting herself at risk? So let's look at these 3 questions a little closer. Is ZXS Medical a good opportunity? Yes, we feel it is a good investment opportunity for Ann. ZXS Medical has passed through several layers of the Keiretsu Forum's rigorous screening process and due diligence. They have a qualified management team, which is a key issue for angels. They have a large and viable target market, and the industry is growing. They also have a sound exit strategy via acquisition by a large healthcare company, and have a short pathway to FDA approval and a founder with FDA process experience. This FDA approval was identified as a risk earlier in the presentation. However, it is a very manageable risk. Also, the terms of the deal are very favorable for investors. They have a fair pre-money valuation of $7.5 million. They have attractive dividend income offered. They have 20% warrant coverage to sweeten the deal. And they have anti-dilution and liquidation preferences. Other more experienced investors are already on board, which is a very good sign. And money raised is amounting to about 44% of the $1.5 million in funds sought. We feel ZXS Medical is a good investment opportunity for Ann. Taking that a little further, is it too good of a deal to pass up? Well, angel investors see a tremendous number of deals but invest in relatively few. In fact, in 2014, angels invested $24 billion into 73,000 companies. This represented less than 5% of the companies seeking angel investments. The Keiretsu Forum sees an abundance of opportunities, but screen through and only offer the best ones to their members. One of the sayings or cliches, if you will, in the investment industry is deals are like buses. There's a new one that comes along every 15 to 20 minutes. Anna has already made 2 investments. She's demonstrated her willingness to invest. As a member of the forum, she will have many, many more opportunities to invest. And her goal is to make 10 investments, presumably over the course of several years. So there's no rush. And is this too good to pass up? We don't think so. However, we do recommend that it is a good investment, just not merely too good to pass up. So the last of these 3 questions, is Ann putting herself at risk? Well, of course she is, as most angel investors are when they invest in a startup company. However, Ann has extensive background in entrepreneurship, early stage venture financing, and even the industry. She understands that any early stage company investment may be high risk, but she is mitigating these risks as an angel investor through her Kairetsu Forum membership and a planned portfolio with a diversification strategy. Ann and her husband have hands-on entrepreneurial experience, and therefore her positive view about the ZSX team is a qualified professional judgment. In addition, they have experience in the industry through their medical device company, so therefore we feel she can trust this judgment about the opportunity, the industry, and the potential of this opportunity. In short, there's always risk, but in this case, Ann's risk is minimum, relatively speaking. This brings us to our group's recommendation that we do feel this would be a good opportunity for Ann to invest. All signs are positive, so Ann's investment decision comes down to her instinct and confidence level. An investment into ZSX of $50,000 would not represent an unreasonable portfolio risk, balanced by her other investments. Her decision is also mitigated by research, due diligence, as well as her business experience and acumen. Ann brings domain knowledge and experience in the medical device business. There will also be many other opportunities for her to consider, but this is a good one. If her only doubt is whether the investment will be a winner, that's normal and okay. If she has doubts about the company itself and or the founders, then she should pass. However, at this stage, our group highly recommends that Ann take this opportunity and invest $50,000 into ZSX Medical, as well as interact and contribute to the board's operations. Thank you for joining our presentation. Have a great day.